Hello, everyone, and welcome back to our weekly recap. I'm not sure what number this is. It's probably like 7 from like what I said yesterday. Basically, what we do on these is we just go over all the trades that I took this week, what I could have done better when I was trading, and all the trades that I should have took. So, we're gonna start on Monday. Monday, I was break even because I took two trades. I'm not gonna do a lot of charting out of stuff because like I already know everything was. I'll just like tell you guys where profits would have been taken and where stop losses would have gone. So our buys for this was longs because off London session literally we're just moving it down slowly and we get a little bit of reversal. So basically manipulation reversal kind of. But pretty much off market open, what we'd want is a 15-minute or 5-minute manipulation to the downside. We do get that, and then all we wait for is a break of structure and a retracement and a candle closure in our direction off of that, and then we take our trade. So what do we get here? Inverse fair value gap retracement. You shouldn't trade off this. I took a trade off this because the S&P 500 gave us our confirmation. Um, right? So like, um. To be real, oh yeah, cause my stops. Oh yeah, this was so stupid. Cause yeah, I remember taking this trade. I took it. I put my stops right below this gap for some stupid reason. While my stops obviously could have gone down here. But yeah, I shouldn't have even taken that trade because the risk isn't there. And then we get our actual break retracement into equilibrium and an order block. So boom, literally we can take a trade right off this candle closure. Enter here, stops below the retracement confluence. Targets were, I think there was like hourly draws. There's hourly draws like that got hit after this move up, and then some after that. So boom, basically take profits are just about like here off this leg up. That's when we hit our first take profit from yeah this 10 a.m. news candle. Monday we should have been winning day. Should have taken this one trade, then been done for the day. So that's done for Monday. Delete everything here. But yeah, I took that trade. My stops were too low. I lost, and then I took the actual correct trade, but it was break even because yeah, because I took that first loss. So now we will move on to Tuesday. Tuesday was a unfortunate losing day because what we got off this is we get right our break of structure, and then we get our retracement bearish closure off that, enter here, stops above the draw, and then our target was it was London lows right here because what I was expecting price to do is after we took out this one hourly draw on liquidity right here, I was thinking, okay, we only took out one draw on liquidity. Price probably can retrace up higher and then take out this draw lower, which our bias obviously was also shorts. But unfortunately, we literally enter immediately. Price just does not go in our direction. I'm gonna get stopped out. On here, though, I almost did take a second trade. I think it was like somewhere here, but like to be real, like this in this situation, there's no reason to take a second trade because literally price is like it's gone. Like it would be different if you had stops like lower or if price like literally it wasn't moving so choppy like this. This was our leg down and then we just chop it up for the rest of the day, just basically consolidate. So like you don't really want to trade off that. Because chances are, market isn't just going to randomly pick up and just have like a super crazy sharp move to the downside and hit your profit points. So yeah, realistically, take one loss, then just move on and go about your day. Next up, we have Wednesday. Wednesday, I got emotional and did not trade. Well, I did take a trade, and then halfway through it, it was like within this consolidation, I got out because I got very, very nervous because S&P 500 literally was hitting what I thought was a profit point, and I was like, bro, we're so gonna reverse off this, which, I just gotta stop doing that crap. But anyways, what I answered with was a break of structure for value gap, candle closure off of that, and my stops were down here, or they might have, no, I had my stops down here. but this risk is too low, so realistically, you should have had your stops here, where you could have actually entered with a way better risk to reward, and then boom, enter the trade, consolidate for a little bit, then price its first take profit, and then second, and then third, and then if you want, you can hold up all the way to these hourly highs, which would just take some time, but it does end up hitting. But realistically, all I'm doing here is because S&P 500 by this point would have taken out hourly draws on liquidity and price probably would reverse. I would just try to target 5 minute, 5 minute high, 5 minute high, and then this 15-minute high, and then just call it a day. So yeah, pretty good risk to reward off this. I just got emotional and exited because I thought price was gonna reverse because we weren't moving too well to the upside. But yeah, now I know that price doesn't always have to move super quick. It can take some time before price can actually hit your profits. And then Thursday was an actual no trade day. I played this day good. Literally, bias was shorts. Off market open, we take out two draws on liquidity to the upside. So there's no way we're going to get there's no way like longs would be a trade you should try to take today. So then what we get is break of structure, and then we yeah, okay. So what we had here, we could have entered. It would have just been really early. So what we had here is break of structure, hit the order block, push out of that, and then you could have taken this trade at 937, stops above this liquidity sweep, and targets were either these 30-minute lows here or this hourly low here. Either one would have worked as a take profit one. Probably try to get that take yeah, probably try to get the other one as your first take profit. But honestly, yeah, really, we could have taken this. It's a little bit too early, but I'm still not gonna take it. And then like I was like, okay, this actually is printing pretty well. If we can like stay here, then I'll take a trade. But what happens? We break structure, and then it's like, okay, now we have to wait for all our confirmation to hit again, and then we break structure here on Nasdaq, and then I'm like, okay, if we can get a retracement up into this equilibrium point, which is also this order block, then I'll be willing to take it. Oh, gosh, sorry, I just got like stuff stuck in my mouth. Then I'll be willing to take a trade. But what happens? We don't quite get our retracement. We get a candle closure. Then we go down and we hit take profits. We hit one draw on liquidity. Then we reverse, like 1 hourly draw on liquidity, and then we reverse to the upside. But yeah, really. S&P 500, we got all our confirmation. Nasdaq, we just didn't. So it's whatever. Could have entered off an earlier trade entry, possibly, but we'll see about that. I'm not too sure that's actually something you should do. But yeah, Friday was just not a good day. Like I didn't really even do anything wrong, but it was a lot that happened Friday. Sweet. Okay, not even 10 minutes in, we're already almost done. That's dope. Okay, so basically the trade I took, it was with all my confirmation, break of structure for value gap retracement, candle closure off that, longs here, and stops were down below this strong liquidity, and take profits were this 5-minute high right here. So what really happened here, and the reason we did not end up hitting take profit, was because this high right here, it may look like a normal 5-minute high. Like these highs are like, okay, these highs aren't bad to target. They're a little far away, but like price could probably get up to this point as long as we get all our confirmation. But the only problem, this high was not formed on the S&P 500, which means it's an unlikely price zone for price to actually go up and hit because it's only on one pair. Because why would the S&P 500 want to go up here? Because there's nothing there to target. We could say S&P 500 would get all the way up here, but if you just look at the charts, price isn't going to get all the way up here. Like it's unlikely. It could happen. It's not likely to happen, and it doesn't end up happening. So really, this isn't even a valid target as our take profit because it doesn't form on both pairs. So then it goes, okay, what's our valid area to take profit at? So we can look on both pairs, be like, okay, we form a 5-minute high right here. We can take profits there. But then you look on here, NASDAQ doesn't form that 5-minute high. Price likely won't reverse from there. And then it's like, okay, well, they both formed this for a value gap right here. But realistically, that's the same as just saying price is going to reverse after touching here. And if they're stacked like this, you probably want to target the gap that is furthest back, like the highest or lowest gap, depending if you're moving up or like moving down or moving higher. It's the highest gap since we're moving lower. So realistically, right here is the spot for price to reverse off of. What happens? Both pairs hit the fair value gap, price reverses and goes lower and pushes below this low. So literally, how does this affect how we would have traded? Okay, actually, I gotta draw a little line on this. So for value gap, opens here, ends right here. We do end up inversing the gap, but doesn't matter. There's nothing else like as a magnet. There's nothing else to magnet price. So then what happens? Okay, we're chilling here, waiting for first break of structure. Okay, we get it. We're hoping we can get a retracement before we touch the fair value gap. Then what happens? We touch the fair value gap, and then now we get a retracement, but then it's like, okay, price likely will reverse from here, and there's nothing to target anymore. So what do? We stay off the markets, and we don't take a trade. So really, what should have happened this week? Monday we should have taken a win. Tuesday we should have taken a loss. Wednesday we should have taken a win, and then Thursday and Friday we shouldn't have traded. So only 3 trades this week. Friday, honestly, like Thursday wasn't even bad. Like I really wanted to trade Thursday, especially because of the emotional trade that happened on Wednesday. But anyways, this week, so what actually happens? This week compared to what should have happened, it should have been a 1 win profit. It should have been 2 wins, 1 loss this week. What actually happened was break even, a loss, and another break even trade on Wednesday because I got emotional, and 2 losses on Friday because also Friday was like I took another 1 minute trade off break and fair value gap dip off this candle, and I was hoping price could get up to this 15-minute high, which that's a reasonable target. The only problem, it's too late in the day, and your move up that you should have traded off of already happened. I didn't know that at the time because I wasn't thinking that price moving up here was a significant area to go for. I was just thinking, okay, we're not ready to reverse yet. We're gonna get our true reversement, or true reversement, or true reversal off this second area because this is what happened last Friday when we made a move higher off FOMC. But yeah, move was already made. We traded after the move and had our profits at an unlikely high. So that's what we should have done better. We lost $850 this week. But yeah, it's whatever. Anyways, um so the thing, yeah, Monday I will not be doing a recap on Monday because it is a bank holiday. The rest of the week after that though is good. And now school starting back up. It's going to be a little tricky to trade and get these recaps out, but I'll manage. Anyways, thank you guys for watching. If you watched all the way this far, consider subscribing to the channel for more trading recaps. And I will see you guys, actually, yeah, see you guys Tuesday for day 36.